You are watching Market Watch, the brief overview of the key events from the world of finance. The main topic of discussion on Monday was the statements of Fed Chairman Jerome Powell during an interview on the program 60 Minutes. This program was released on Sunday, but it may have an impact on the market for several days, because we are talking about the prospect of changing the key interest rate. The governor of the American regulator once again gives the message that the key interest rate will not be changed in the near future. He emphasized that the work on curbing inflation has not yet been completed. But in fact, it is not so important what exactly was said, but the fact of regular appeals to listeners and, in particular, to investors. It looks like an attempt to cool down buyers in an obviously bull market. As a rule, stock market sales support gold, because stocks are a risky asset, and gold is relatively safe. But this time we are seeing simultaneous sales of gold and stocks. The decline in the share price occurred due to a decrease in the likelihood of easing the Fed's key interest rate, while sales in the precious metals market may be due to the lack of an increase in the likelihood of a recession. After all, the Fed's willingness to raise the rate indicates that the voting members of the Monetary Committee consider the U.S. economy to be stable. Consequently, the demand for protective assets is decreasing. I will also pay attention to the oil, which has also been repainted in red. At the same time, please note that before the collapse of precious metal and oil quotes, both assets approached important technical resistance levels, previous highs. Therefore, gold's breakdown of support at the $2,004 mark may strengthen the sell-off, dropping quotes to $1,976 and further to $1,933. At the same time, American-grade WTI oil enters a wide accumulation zone between $71 and $67 per barrel. A strong bullish fundamental factor is needed for its breakthrough. And in conclusion, let's talk about the cryptocurrency market. Bitcoin continues to consolidate slightly above $42,000. At the same time, demand remains very weak near the technical resistance level of 43,700. Moderate sales on the U.S. stock market acted as a deterrent for buyers. Further growth in stocks, especially in the technology sector, may support the cryptocurrency market. Since in this case, interest in the newly created Bitcoin ETFs may increase, which now allow investors from the United States to buy cryptocurrency in an understandable and convenient way for them. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.